College is expensive, right? I mean, it can feel like this impossible, never-ending mountain to climb for families all across the country. But while digging through the tax code for this explainer, we found a direct, highly lucrative solution to help you claw back some of that hard-earned money. Welcome. Today, we are completely unlocking the secrets of the American Opportunity Tax Credit, or as the tax pros call it, the AOTC. We're not just talking about pocket change or some tiny, insignificant deduction here. We are talking about a major financial benefit. You can get up to $2,500 per eligible student every single year for the first 4 years of higher education. Think about that for a second. If you're a parent supporting 2 kids in undergrad right now, that is up to $5,000 annually. It's an absolute game changer for budgeting. Okay, let's dive into this because the benefits we found in the source material actually get even better. Up to $1,000 of that $2,500 credit is actually refundable. What does that mean? It means it's literally money that can go directly back into your pocket as a refund check, even if you owe absolutely zero taxes to the government. It's essentially the IRS handing you cash to help offset your educational expenses. Now, just to be completely clear, we aren't just pulling these numbers out of thin air. Everything we're covering in this explainer is pulled directly from official IRS documentation alongside some really great expert breakdowns from tax professionals at SK Financial and Dean Dorton. So you can trust this. This is the official, verifiable playbook for claiming your money. So here's our painless step-by-step roadmap for today. We'll meet the AOTC, look at who actually gets the credit, figure out what expenses qualify, walk through filing the paperwork, compare the AOTC to the LLC, and finally, learn how to avoid IRS trouble.
Section 1. Meet the AOTC. Demystifying the math.
Before we get into the super strict eligibility rules, we really need to look at how this credit actually calculates your college spending. Like, how do you get to that $2,500 number? Well, the math is beautifully simple once you break it down. To get the absolute maximum credit, you need to spend $4,000 on qualified education expenses. Here's how the formula works. The IRS gives you a 100% dollar-for-dollar match on the first $2,000 you spend, literally a full match. Then they give you 25% on the next $2,000. Combine those two buckets, and boom, you hit that $2,500 sweet spot perfectly. So the crucial point is translating this specific tax jargon, refundable credit, into plain English. A refundable tax credit is incredibly powerful because it can reduce your tax liability below zero. If the credit completely wipes out your tax bill, the IRS doesn't just call it a day and stop there. No way. They'll actually issue you a refund check for the remaining difference. And like we mentioned earlier, that's up to 40% of the credit, maxing out at a cool $1,000 per student. Section 2. Who gets the credit? The IRS eligibility gates. Okay, let's treat this next part like a rapid-fire mental checklist. You have to pass through these strict gates to get the money. First, you can claim this credit for yourself, your spouse, or a dependent claimed on your return. Next, the student has to be in their first 4 years of higher education. They also need to be enrolled at least half-time for at least one academic period, and they must be actively pursuing a degree or recognized credential. Oh, and here is a very specific, absolutely rigid rule. The student cannot have a felony drug conviction at the end of the tax year. One strike there, and the entire credit is off the table for good. Now, what's really interesting about this slide is seeing exactly where you fall on the income spectrum to see if you actually get the full credit. The IRS uses your modified adjusted gross income, which, is often just line 11 on your tax return, to figure this out. If you file as single, you get the full amount if you make $80,000 or less. For married couples filing jointly, that limit doubles to $160,000. Now, if your income falls into that middle phase-out range, your credit gets proportionally reduced. And if you make over the absolute maximums, like $180,000 for a joint return, you unfortunately get no credit at all. Section 3. What expenses actually qualify, beyond tuition? Now, you really need to pay attention here because the IRS is incredibly particular about what you can and cannot buy. Notice the stark difference between the allowed expenses and the massive gotchas that trap so many well-meaning people. Your eligible expenses are pretty straightforward. Tuition, mandatory enrollment fees, textbooks, which we all know cost a small fortune, laptops, tablets, and required supplies. But then there are the traps. Room and board? Absolutely not. I know it's a huge expense, but no. Transportation and insurance? No way. Even medical or student health fees are strictly prohibited. Literally, even if your university legally requires you to pay a student health fee, the IRS considers that a medical expense, not an educational one. Do not include it. And here's a brilliant piece of advice from the tax experts we reviewed. Track your outside costs. Your university is going to send you an official tax form for tuition, but it only shows what you paid directly to the school, right? So if you run out to a big box store to buy a required laptop, highlighters, or off-campus textbooks, those qualify perfectly, but your university won't track them. It's completely on you to keep those outside receipts to help maximize that $4,000 spend. Section 4. Filing the paperwork, claiming your money. I know, IRS forms can induce a bit of dread, but navigating this without getting intimidated really just comes down to 4 methodical steps. Step 1, keep an eye out for Form 1098-T from your school, which usually shows up by January 31st. Step 2, and this is absolutely vital, you must subtract any tax-free scholarships or grants from your expenses. You can't use tax-free scholarship money to claim a tax credit. The IRS considers that double dipping, and they hate it. Step 3, complete IRS Form 8863 to calculate your exact credit amount. And finally, Step 4, simply attach that Form 8863 to your standard 1040 return. That's the whole shebang. But stop. Hold on. Before you file anything, I have to give you a very firm warning. You, your spouse, if filing jointly, and the student must have a valid taxpayer identification number, like a Social Security number, issued on or before the tax return's due date. If you miss this TIN deadline, you are permanently locked out. You literally cannot go back and amend your return later to claim the AOTC. The IRS is completely inflexible on this specific rule. Section 5. AOTC versus LLC. Choosing the right credit. Now, you might be wondering, well, what happens if I don't qualify for the AOTC because I'm in grad school? And this brilliantly illustrates why the AOTC is usually the absolute champion for undergrads, but the Lifetime Learning Credit, or LLC, is an incredible fallback option. The AOTC gives you up to $2,500 per student and is partially refundable. The LLC maxes out at $2,000 per return and is strictly non-refundable. However, check out those bottom rows. The LLC has absolutely no 4-year limit, no half-time enrollment requirement, and no felony restriction. So if you're a grad student or honestly just taking a single job skills course, the LLC is your perfect alternative. Section 6. Avoiding IRS trouble. Keeping your claims safe. Let's quickly outline the most common pitfalls that will instantly trigger an IRS review. Claiming the credit for a 5th year. Trying to sneak room and board into your expenses. Forgetting to subtract those tax-free grants. And for divorced parents, please remember, only the parent who officially claims the student as a dependent gets this credit. You cannot split it between you. Lastly, if your filing status is married filing separately, you are completely disqualified right from the start. So how do you actually protect yourself if the IRS comes knocking? It's simple. Retain everything. Keep your records, receipts, and forms safe for at least 3 years from the tax return filing date. Keep your 1098-T, your receipts for that off-campus laptop, your worksheets, and your notes proving you explicitly asked and met all those strict eligibility questions. Because listen, if you're audited and you fail to prove your claim, the consequences are incredibly severe. I'm going to read this directly from the IRS guidelines because it really deserves a serious tone. If you claim this incorrectly, you must pay back the amount of the AOTC you received in error with interest, may also be charged an accuracy or a fraud penalty, can be banned from claiming AOTC for 2 to 10 years. You definitely don't want to end up on that list. Accuracy is absolutely everything here. We've covered the math, the strict rules, the exact paperwork, and the harsh penalties. You've got the blueprint now. You're fully empowered and prepared to confidently tackle your education taxes. So the only question left is, are you ready to claim your $2,500 without falling into an IRS trap?